Hello, it is the 11th of January 2011. Welcome to today's silver analysis, and I'll start off with the price memory history. And this is how many times over a 15-minute time frame that silver has traded within a quarter above or below these prices below. So these three here are the biggest. This one in here is 29, 29 and a half to 30, so roughly around the 29 area. There has been a lot of action within that time frame, which is really showing how well this market has been consolidating through that of time. Now, on the 15-minute line chart, what has happened today, it has rallied above this 5-day moving average. This was the first test of the declining 5, and it's gotten above it very, very nicely. Now, I think what would be important is to be able to hold the 29 and one-third level. It's been a pretty big barrier over the last few weeks, 5, 6 weeks or so. And then if that's the case, and the 5-day moving average can start to flatten out and move higher, we also are battling within this 10 and 20-day moving average, which are these two lines that are above it. And then some might say, well, we're developing a head and shoulders pattern. This would be the left shoulder. This would be the head. So now what I'd want to see is it go up to 29 and two-thirds and then start to collapse. And well, if that happens, we would have an inverted head and shoulders pattern if it goes up and then starts to sell off, which is why the 38.2 and the 61.8% retracement is going to be very important. That means the lows from in here to whatever the highs it establishes. If it retraces back from that, that is fine. If it hits either up or downwards towards a 61.8 and bottoms at that level, then the head and shoulders pattern cannot develop and it would be a successful retracement. However, if the market does manage to cave in, then finally we might get that test of the 50-day moving average and maybe the 25-26. But overall, the market is in a range-bound market more than anything. The range, I guess, for the most part of the last little while has been between the 28 and a half to about the $30 level as the range that we have been trading within. Now, as far as the daily chart is concerned, what I put up is the 50-day low, and I'm going to come back to it later on at the start of next week or so, because what this does, it takes the lowest point that silver has been trading at within the last 50 days and how much it is above that low point, which right now it is barely above 20%. Before, when I had this, I was stating that when it broke this resistance line, then it was a good buying opportunity, which happened back right when the rally began back in August. Now the question is, when will this start to give us another good buying opportunity? Well, within this trend, it's obviously in a downtrend right now. So there's no reason on this to say, hey, this is starting to roll over, because right now it is not. As far as the trend's concerned, we have broke this trend line. But what we can notice in here is now we're coming up to that decision time frame. Question is, this break below the trend line, will this be that of a bear trap, which would obviously be a failed move? Failed moves often create fast moves in the opposite direction. The opposite direction would be higher. Or is this the area where it's facing resistance? Will this be the resistance area that will thus set us for that wave lower that may test us towards that 25-26, which will make the next couple days fairly important to determine which direction that it wants to go in. So I'll update this later on this week, because what happens is the 50-day low, which currently is around 23 something will move up to 25 in the next few days. So thank you for watching and have yourself a great day. Bye bye.